Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. It's a good day for the market. Sensex has got a fresh record high today. Nifty, Sensex both pretty much at record levels. And it's the mid-cap space which is underperforming the key indices. It's the heavyweights which are really taking the charge, like Reliance Industries and even Kotak Mahindra Bank. That is really gaining and has come closer to 1300 levels after seeing some pressure in the last week. So it's looking good for the markets. It's the bank Nifty which is really doing well, and amongst the big banks it's only Punjab National Bank, because of its results yesterday, is in the red, while everything else is contributing well.
Yes, it is. In fact, the stock of the moment really is Reliance Industries. So out of that 51-point gain that the Nifty is seeing this afternoon, if you pull up the contribution plate, you'll realize that 15 points of that is contributed solely by Reliance Industries. And then you have the three private sector banks, HDFC, Kotak and ICICI Bank, that are together contributing about 15 points or so. So that's the reason why the market is moving up, that huge up move from Reliance Industries this afternoon. By the way, really good numbers coming in from Minda Industries. The auto ancillaries have done very well this quarter. Minda Industries is seeing a whopping 64% growth in its net profits. And look at that, the stock has just rallied post the numbers coming in. But in a mega CNBC TV18 exclusive, CNBC TV18 Shireen Bhan traveled to the Bill and Melinda Gates Foundation to catch up with Bill Gates, the co-founder of Microsoft and co-chairman of the Gates Foundation. Listen into his views on the ongoing global trade war.
We're in the midst of tariffs and retaliatory tariffs, with the US imposing tariffs, China responding, the EU is in on it as well, including India. How do you see the global economy today as we look at political leaders who are perhaps looking more inwards than outwards? What is the impact likely to be on global trade?
Well, the global economy actually is doing quite well right now. The estimates have actually been pushed up a little bit. U.S. growth, China growth, India growth. Those are, it's rare that those are all going fairly well. Certainly, these trade issues are scary in that if you get people turning inwards, raising up tariffs, the global economy is not going to do as well. There's huge benefits to trade. Take if one country's growing too much of a crop, the fact that you can, send it, say, to Africa where it's needed. Otherwise, when you get a bumper crop, then you get a price collapse because you don't have that global demand. And so agriculture's been an area where a number of countries, including India, had to think, okay, how willing are they to be a part of that global trading system.
So, we're not in the midst of a full-blown trade war just yet. What do you believe is likely to be the tipping point?
Well, I don't have a crystal ball on this, but the rhetoric that, okay, we'll use trade tariffs and we'll force somebody to do something, that can escalate. And so, we could end up with a lot of tariffs, and all the plans people have made about assuming their global supply chains will work and that they're able to do exports and imports, that alone will be quite a burden on economic growth and therefore for job creation. And in all of these things, you always have to say, okay, the poorest countries, they're the ones who are just barely getting by. And so it's always interesting to think, how do we avoid them suffering? Even Indian farmers want, their crops to be exportable.
All right, so that was a big voice on the show. Let's now focus on the auto segment. And in fact, the commercial vehicles and the tractor manufacturers raised their FY19 growth guidance for the sector. In fact, Ashok Leyland, that stock is up today over 4%, has raised the volume guidance to 15%, while M&M as well as Escorts have hiked the tractor industry guidance to 12 to 15%. Sonia will take us through all the details. So it's looking euphoric at this point, this particular segment.
For these two pockets, yes. For the commercial vehicle space as well as for the tractor space. So as you rightly pointed out, Ashok Leyland was very optimistic in their interaction with us earlier in the morning. They've raised the guidance for the full year FY19 from 10 to 15%, and for FY20 they say that there could be a 30 to 40% jump. Now, what is leading to this? The MD of Ashok Leyland, Vinod Dasari, travelled through the country, and his key takeaway was that there's a big infrastructure pickup because of which sales would go up. Also, as the BS6 transition happens, the cost of the trucks will go up, and we might see a lot of pre-buying ahead of the BS6 rollout. And those are the two reasons which could lead to higher truck sales. But it's not just truckers, it's the tractor industry as well that has raised their guidance. M&M has raised its FY19 tractor guidance to 12 to 14% versus 10 to 12% earlier. In fact, they will consider raising the auto sector guidance as well, but that will be only after looking at the consistent performance October onwards. So that would be important to keep in mind. Escorts was the first one to do that. In fact, they raised their tractor industry guidance as well from 9 to 11 to 12 to 15%. So clearly the positive monsoons, the IMD recently raising their monsoon forecast, as well as the infrastructure pickup is leading to these two pockets doing quite well. Let's listen into what the management of Ashok Leyland had to say earlier in the morning.
I was revising the growth norms from about 10% that I had previously stated to you, shows that I think we will grow at least by 15%. Next year will be 30 to 40% growth in my opinion. You will see two launches happening from us. The first one will be in end of this quarter, which will be the world's first 5-axle truck that can now carry, that can now lift 4 tires. It's never been done anywhere in the world before. So we are launching that. We had showcased that. So that will change the industry dynamics quite a bit and give us substantial revenues and hopefully market share also.
Looking pretty good. The bank Nifty is now up almost 0.7%. So that's where the big boost is coming from this afternoon. And in terms of individual stocks, a lot of stocks hitting new highs, especially in the pharmaceutical space. You know, names like Ipca Laboratories, Torrent Pharma are stocks that are hitting new highs today, 52-week highs, of course. So up almost about 2-3%. And some volume action as well is what you're seeing in these names. Apart from that, Minda Industries is reacting very well to its numbers. A strong set of numbers this time around, and now that stock is up almost about 5-odd%, making its market cap almost 12,000 crores. So super performance from Minda Industries. But from the pharma pack, Cipla will be reporting its numbers later today. So Ekta is here to give us a quick preview of what to expect. Ekta, over to you.
Hi, thanks for that. Well, for Cipla this quarter, we are expecting some amount of improvement to take place on all parameters, which includes the revenue, margins on a Q-on-Q basis, as well as in terms of profit. Now, what we are expecting is a double-digit growth of around 16-odd%, which would be led by the India business on account of a low base, which would be favorable to them on account of GST-led disruption same time last year, as well as the US business picking up on account of drugs such as Decoding generic, which would really be adding in terms of the revenues or sustaining in terms of the US business and contributing there. For the margins, remember, that would be important to watch out for, because that was the key disappointment last quarter, where it had fallen to 15% versus 19% in terms of expectations. So any sort of improvement on a Q-on-Q basis for the margins would be closely watched for Cipla.
Yes, Ekta, and it's a good day coming in for Strides as well, which had come out with its results, and the stock is roaring in trade, also because of the bounce back that it has seen in overseas businesses.
Yes, absolutely. Well, you know, Strides, Shasun, if you really look at the numbers on first glance, it's nothing to write home about. It's an absolutely flat performance in terms of the revenue. Its margins have just about sustained at 12%, and they've incurred another loss of around 4-odd crores. But you got to look at it in the context of how disappointed the street was with the Q4 FY18 numbers. So what this quarter indicates is that there's some amount of stability in terms of the operations for Strides which has come through. with no sort of surprise on the negative or the positive side. It seems to be a working quarter for them, and that's probably what the street likes. Also, the fact that the US business has bounced back year on year as well as on a Q-on-Q basis in double digits. The management has said that pricing pressure is stable in most products. So that kind of commentary and statistics for US has really boded well for them.
Okay, thanks a lot for that. So that is the Strides numbers. The margins have improved quite a bit. I think we've seen it after a while, actually, up almost about 6% there. But let's get you a CNBC TV18 exclusive now. Lata Venkatesh did catch up with Sanjeev Goenka, the head of the Sanjeev Goenka Group, and began by asking him about the company's foray into the FMCG space and, of course, his plans about listing CESC Ventures and Spencer's. Listen in.
The holding company will, of course, be listed. Okay. This will be
This is Ventures?
This is CSC Ventures.
Okay.
But this company will also get listed at some stage, but at a much later stage, once it's a lot bigger. We have many more plans.
Okay.
So far, it's only been guilt-free snacks.
Okay.
But you will see other categories coming in. Work is on at a frantic pace.
Okay.
We are already out to, I think, 390,000 distribution outlets, which is like a phenomenal ramp up, actually.
That covers the entire country?
That covers the entire country. But we have to double this number in the next 12 months.
Okay.
And
okay.
Fingers crossed.
Sure, of course. You know, what's the timetable for listing CESC Ventures itself?
Well, we've got the NCLT clearance. We are awaiting a clearance from the State Regulatory Commission, which hopefully should come soon. So as soon as that comes, we'll apply to SEBI for
so maybe
listing.
we are, what, a couple of months away?
I hope.
Okay. No, I mean, otherwise your entire demerger plan and listing plan is over. This is the last of the block.
This is the last, yes.
What may be the size you are looking for your FMCG business, for your snacking business? How much is it already? I believe you have products even other than 2Yum. So what is the total size of that FMCG piece?
Well, FMCG today is at a beat rate of about 500 crores.
Okay.
I think in the next 5 to 6 years, our target is 10,000 crores.
Okay. 10,000, okay. So
yes,
you expect
absolutely.
to go 20 times in 5 years?
Absolutely.
So you list only at that time?
No, we list somewhere in between.
Okay, okay. And CSC Ventures, of course, will absorb the valuation of this potential giant.
Absolutely.
All right, another pocket which is in news today is the oil marketing companies, and some of the key earnings are expected today from that particular space like HPCL, BPCL, and that particular pocket is looking under pressure ahead of the Q1 numbers today, also because crude prices have been on the higher side. Sonal is right here to give us all the details on what's expected from both the counters, Sonal.
Well, we are expecting weak set of numbers from both HPCL and BPCL, Nisha, and that is because the crude prices were on high levels in the quarter gone by. Well, average Brent crude prices was up around 48% on a YoY basis and around 11% on a sequential basis. And that's why core earnings are expected to decline due to lower gross refining margins. Starting with HPCL, we are expecting a revenue growth of around 18.5%, but EBITDA, that is expected to go down by around 13.5%. Operating profit margins, thereby seeing some sort of contraction. Even profits, they are expected to go down by around 21%. And the main number that I'll be watching out for is the GRM number that is expected at $5.7 per barrel. This is the core GRM number that I'm talking about, which will go down 13% sequentially and 35% on a YoY basis. There will be some inventory gains considering the high prices of crude that we saw. And Kotak is estimating inventory gains of around 340 crore rupees this quarter. Even the marketing margins are expected to be subdued at 3.8 rupees per litre. That implies a decline of around 13.5% sequentially because the price hikes were not adequate in the quarter gone by. In terms of refining throughput numbers, they'll come in at around 4.52 MMT this quarter, and also the marketing sales volumes, they are expected to remain quite flattish at 9.6 MMTs. Going to BPCL, another weak set of numbers, revenue growth of around 13%. However, EBITDA, that is expected to decline by 14%, and profits also will see a sharp knock of around 25%. In terms of GRMs, core GRMs are expected at $5.2 per barrel. Marketing margins are expected to decline sequentially at 3.5 rupees per litre versus 4.6 rupees per litre, and the refining throughput is expected at 7.9 MMTs in this particular quarter.
The other thing that I'll be watching out for will be the reported GRMs, which is actually in the release. They are expected to remain flat this quarter at around $6.5 per barrel. These are the broader numbers that I'll be watching out for. But yes, expected to be a weak quarter this time around.
Okay, Sonal, thanks a lot for that. So that's the expectation as far as the oil marketing companies are concerned. But moving on, the IMF has released a report on India's growth outlook. Let's find out what the highlights were. Ritu Singh joins in now. Ritu.
IMF says India's near-term macroeconomic outlook is fairly stable and it remains on track to hold its position as one of the fastest growing economies in the world. Growth, according to IMF, is projected to grow at 7.3% in FY19 and 7.5% by FY20, and over the medium term touch about 7.75% on the back of strengthening investment and consumption demand picking up in the economy. But it does highlight there are risks that India needs to be cautious of, especially those emanating from the inflationary front, which it says RBI needs to take stronger steps to curb inflation by tightening monetary policy even further after its recent rate hikes. It also sees India's inflation rising to 5.2% by FY19, which is above RBI's medium-term target of about 4%. There are risks to this outlook both on the external and domestic front. On the external front, it is the high oil prices as well as the geopolitical tensions that could spoil sport. But on the domestic front, any uncertainty with respect to revenue collections because of the GST implementation as well as the twin deficit sheet problems, those remain the key risks that the IMF has highlighted for India. And just to sum up, there's also a wording on the public sector banks where it says the government needs to take a stronger stance on divestment and privatization of public sector banks if it is to see better governance standards.
All right. Thanks so much, Ritu, for getting us all those important details. With that, we'll slip into a short breather on the show. But up next, the nation mourns the demise of Karunanidhi, and we get your ground report ahead of the burial ceremony. All right, so those are the heartening pictures really coming in from Chennai. DMK patriarch M. Karunanidhi passes away and the nation grieves the loss of the Dravidian icon. Let's take it straight to my colleague Jude Sanith, who's right now joining us straight from Chennai with all the details. Tell us, Jude.
Oh, well, there was legal drama that preceded Karunanidhi's funeral that, of course, will happen in just a couple of hours from now. Remember, the DMK knocked on the doors of the Madras High Court late last night after the Tamil Nadu government denied permission for the party to rest Karunanidhi's mortal remains at the Marina Beach. Remember, the location is significant because it contains the mortal remains of former chief ministers like Jayalalitha, MGR, and, of course, Annadurai. The DMK's argument was quite simple. The fact is that while the Tamil Nadu government cited pending cases and legal hurdles as reasons for denial of permission, the DMK said that as far as the cases themselves are concerned, the same situation was prevalent at the time of Jayalalitha, and if she was interred at the Marina, the same rules should apply to Karunanidhi as well. The DMK also pointed out that several Dravidian stalwarts, much like Annadurai, MGR, and even Jayalalitha herself, were also interred at the Marina Beach, and therefore it was only right that Karunanidhi also have his mortal remains laid to rest there. And at around 10:45 earlier today, the Madras High Court granted the case in favor of the DMK, ruling that Karunanidhi will, of course, be buried at Marina Beach, which, of course, was a massive victory for the DMK, even as Karunanidhi himself embarks on his final journey. As his body lay in state, of course, Prime Minister Narendra Modi, several other leaders, both locally and, of course, from national parties, came to pay their last respects, even as the funeral procession, we are given to understand, will start in a couple of hours from now. Back to you.
Okay, Jude, thanks a lot for giving us all of those details. Well, in the meantime, let's get back to the markets now. There seems to be a lot of chaos there at the moment. But in the markets, it's all smooth sailing, really. So up about 0.5% for the Sensex and the Nifty. However, the equity mutual fund flows have tapered off in July versus what we saw in the month of June. We did speak with MK Global Finance market experts Krishna Kumar Karwa and Sindhu Samir. Hear out what they had to say.
Post the deep cut which had happened in the small cap, mid cap, there is a decent amount of recovery. But I still feel that there will be a decent amount of volatility which will still be there in the small cap, mid cap segment, because going forward, liquidity is going to be a major challenge, both global as well as domestic liquidity. And you also see that as far as the domestic flows into domestic mutual funds, etc. are concerned, they are stable at 7,000-8,000 crores, but until unless you have a bigger amount of flows, maybe the small cap, mid caps is the segment where invest or domestic houses would be reasonably cautious.
Institutional sentiment right at the start of 2018 was fairly reasonably cautious, but everybody seems to be surprised by the rise in Nifty which has taken place. Cult of equity and the virtuous returns which have been made over the last 10-15 years, there is a qualitative, there is a change in the mindset which has taken place. And look at the per capita income which India is showing in last 3 or 4 years, the increase in it. That will see to it that we don't worry much about crude oil prices. Also, we have some surplus capital for financialization to take place. So there is a slow grinding wheels of economy which are percolating down to individual disposable income, which are making these changes happen. So yes, there will be some kind of a hiccup, but if in the long arc of things, it really does not matter that much.
All right, so that's the word coming in on the overall market. So let's take a look. In fact, markets are doing slightly better than what it was in the last 10 minutes. Bank Nifty is really taking the lead at this point. Sensex Nifty over 0.5% up, and it's the mid-cap index which is really playing the catch-up game, 0.25% up as we speak. Advanced decline is looking strong. Some of the counters on my radar right now. Future Consumer, take a look at that. The results, well, they came in some time back, and in fact, on a YoY basis, the losses have contracted for this particular company, but the stock has reacted quite negatively. And if you take a look, it has been consistently going down, almost 5% down now. So there has to be more visibility coming in on the growth, the distribution, sales figures from the management commentary, and also if there is any other information or any other announcement from the company because of which the stock is on the weaker side. Also take a look at Balrampur Chini. It turns out to be a day which is really reacting to the markets and to the earnings and the expectations, it seems, because Balrampur Chini, just ahead of its results, has really spiked up in the last few minutes of trade. So